If you have ever found yourself staring at an unexpected bill 3 days before payday, you know that feeling of sudden panic. You have already worked the hours, the money is technically yours, but it is locked behind a 2-week pay cycle. That is where EarnIn comes in, promising access to your hard-earned cash when you actually need it. But when you download the app and try to cash out, you might hit a wall: eligibility issues. Why does EarnIn let some people access hundreds of dollars a day while denying others entirely? To understand how EarnIn determines whether you qualify, you first need to understand that EarnIn is not a payday lender or a traditional bank. They do not run a hard or soft credit check, they do not look at your credit score, and they do not charge traditional interest rates. Because they do not rely on your credit history to evaluate risk, they rely entirely on automated data verification. That means EarnIn needs clear, unambiguous proof of 3 distinct things: where you work, how much you earn, and where your money goes. If any single piece of that digital puzzle is missing, out of place, or inconsistent, the app will instantly flag your account or freeze your cash-out limit. The foundation of EarnIn eligibility starts with your bank account. You must have a regular checking account with a supported financial institution in the United States. If you use a savings account, a prepaid debit card, or certain non-traditional electronic wallets, EarnIn will deny eligibility immediately. The reason for this strict requirement comes down to how EarnIn recovers the money you cash out. On your scheduled payday, EarnIn automatically debits your checking account for the amount you accessed during the pay period. Prepaid cards and savings accounts often lack the standard electronic debits protocols required for this system to operate reliably. Furthermore, your checking account must receive consistent direct deposits from your employer. If you are paid via physical paper checks, cash, or peer-to-peer apps like Venmo or Cash App, EarnIn cannot automatically confirm your income schedule, which excludes you from cash-out eligibility. EarnIn typically looks for a minimum threshold of direct deposits, usually requiring at least $320 per pay period, deposited on a predictable weekly, bi-weekly, semi-monthly, or monthly schedule. The second core requirement is earning physical or digital proof of hours worked. EarnIn does not give you money based on future earnings. It only unlocks cash for hours you have already completed. How does the app verify those hours? It depends on how you get paid. If you work at a physical job location with fixed hours, EarnIn can use your smartphone's GPS to confirm that you were physically at your workplace during your scheduled shifts. If you work remotely, travel for work, or have variable shifts, EarnIn may require an employer-provided work email address, an electronic timesheet connection, or PDF pay stubs that detail your hourly pay rate and logged hours. This brings up one of the most common reasons people fail eligibility checks: non-standard employment. If you work as an independent contractor, a gig worker for rideshare platforms, or an off-the-books freelancer, standard cash-out features may not work for you. Because gig platforms do not issue traditional scheduled direct deposits from a single payroll provider in a standard W-2 fashion, EarnIn's automated system cannot always verify earnings in real time. Similarly, if your pay fluctuates drastically from week to week, EarnIn's system may adjust your daily cash-out limit down to 0 until a stable earning pattern is established again. Another frequent point of confusion is state regulations and geographic restrictions. Financial access technology is governed by strict state-level lending and financial regulatory laws. Because EarnIn operates under earned wage access guidelines, changes in state legislation can occasionally restrict or alter how EarnIn operates in certain jurisdictions. If you reside in a state or U.S. territory where local rules conflict with EarnIn's operating model, cash-out services may be temporarily or permanently unavailable to you. If you are currently facing an eligibility roadblock on EarnIn, here are the exact steps you should take to resolve it. First, verify your direct deposit setup. Ensure your paychecks are going directly into a traditional checking account and that your employer's deposit description clearly identifies them as payroll rather than a standard transfer. Second, check your location and permission settings. If EarnIn relies on GPS tracking to log your hours, ensure location services are set to always allow while you are on the clock. Third, audit your pay schedule inside the app. If your employer shifted from a weekly to a bi-weekly pay schedule, updating this manually or relinking your bank account will realign the algorithms. Finally, upload your most recent official earning statements directly through the support tools to bypass temporary automated glitches. By ensuring your direct deposit, checking account, and work verification line up seamlessly, you can successfully unlock EarnIn and access your earnings on your own terms.